Everyone, welcome to this Wednesday, April 14th. My name is Beatrice Sturdivant, and I'm going to be your host for today. We're going to wait a little bit for people to settle in and join. Thank you to everyone who's giving us your time today. We're going to probably wait for 1 or 2 minutes while everyone is settling in. And meanwhile, I'd like to welcome everyone to our Part 2 CJ webinar on AML counter-terrorist financing training and 2021 AML changes. My name is Beatrice Sturdivant. I'm the Managing Director of the Canadian Jewelers Association. And CJ is the voice of the Canadian jewelry and watch industry, representing membership consisting of retailers, suppliers, designers, and wholesalers across Canada. And we're here to provide leadership in ethics, education, communication, and crime prevention. Always, we do a few housekeeping rules. We ask everyone to stay muted for the entire time, and please keep an open, positive, receptive atmosphere. We ask that you stay polite and respectful, and ask your questions politely in the Q&A box at the bottom. If we can't get to them live, we will address them afterwards and email all of them to you. And today, for part 2 of our AML webinar, we have with us our beloved guest and trusted partner, Amber Scott and David Vijan for Outlier. Hi guys, how are you?
Wonderful, thank you for having us.
Doing well, thanks.
Well, thank you for joining us again for part 2. Part 1 was really successful, and part 2 is way more packed than the previous one. One quick word on Outlier. Their area of expertise includes Canadian anti-money laundering, counter-terrorist financing, CTF privacy and regulatory compliance. And we're happy that they've created an online, on-demand anti-money laundering and counter-terrorist finance compliant tool for dealers in precious metals and stones, including wholesalers and retail jewelers. Now, this fabulous toolkit is free for the Canadian Jewelers Association members who also enjoy good discounts on consulting services from David and Amber and their team. Otherwise, the non-members pay close to $2,700 for the compliance kit. And we always say the Outlier kit and our fabulous Outlier partnership is probably one of the most valuable benefits that you get belonging to the CJ. And without any other further comments from me, I would like to say good luck to Amber and to David. You guys have an hour that will be packed with information. And again, thank you for everyone who has given us your time. And let's hear what you have to say today. Amber, David,
Thank you very much for having us.
Why don't we start with a little poll? I think just to spice things up a little bit. How do you feel about that? Just to get an idea of how prepared everyone is on AML and how excited are you about what's happening out there, the new changes that are coming. What do you know about them? What do you know about AML? We would love your participation on 2 questions for the poll. They're showing up beautifully. We can't vote panelists, so we're exempt.
I always find this part funny. It pops up and I want to click on it.
No. Are you aware of the new AML requirements that apply to DPMS as of June 1st? Let's see what we got. Are we showing the results now or later?
You can show them now.
Okay, I guess we're still compiling. 1 minute. And questions are pouring in. We absolutely love that. So look at that, fabulous panelists. The answer to the question is 90% said no, they're not aware. Great. Are you ready to comply with the new AML requirements that apply to the DPMS of June 1st? You have multiple choice there. We'll wait a minute for that result to come through. Just a quick note, we are recording the session and we will be sending it to everyone at the end, including people who registered and could not attend. So In case you get distracted or you have to step away for a little bit, do not worry. It will be sent together with a deck at the end of the webinar. We still have the poll going on. I'm wondering if we can display the results, if they're through, and then we move on to give the microphone. 40% said yes, 47 said no, and 30 said it does not apply to their business model. Well, that's a good one. Okay, well, thank you very much for your participation in the poll. Amber and David. Amber, we can't hear you. I saw a thumbs up from you.
There we are. I needed permission to be unmuted. Thank you. So I'm going to start as a compliance geek with a couple of quick, hefty disclaimers. David and I are not lawyers. This is not legal advice. While we're going to be talking a lot about Fintrac, we are not official representatives of Fintrac, and what we're saying is not their official position. If you have a situation, especially because we're talking about AML compliance, if you have a question that involves a specific business or person or any of that identifying personal information, I would ask that you please either anonymize the question so that you're not saying, hey, Bill Smith did something shady, should we report Bill? But saying someone did this, should we report it? Or speak to David or I later. If it's not practical to do that, we're always happy to talk about those types of situations. And finally, information should be free. We hope that you find the information that we're providing in this presentation useful. And if you want to share it with your teammates, you can get in touch with Beatrice and her team, and they will provide a copy of the presentation. So I want to start just by going through a really quick recap, and I will go through this ultra quickly. I'm also going to try to, maybe I'll just ask David to keep an eye on the Q&A for me as I go through this, so that if there's anything that comes up where I need to stop and explain, I will do that. If there's anything here that's confusing and you want a deeper dive into it, definitely take a look at the presentation from last week where we spend a lot of time on these initial concepts. So money laundering, as a starting point, is the process of taking dirty money, so the proceeds of crime, anything that's generated from things from human trafficking to gun sales to cocaine sales, and making that money look like it came from a legitimate source, moving it through the financial system in various ways, acquiring various goods and services to make it seem like that's a legitimate source of wealth. Terrorist financing, on the other hand, involves the funding of any attempts to generally violently influence a government and a populace and cause panic. Now, these are both highly illegal from a Canadian perspective, and as reporting entities, which dealers in precious metals and stones are, there are certain things that we need to do in order to prevent, detect, and deter these types of things from happening. So a dealer in precious metals and stones is a business that buys or sells precious metals and stones, jewelry, watches. Precious stones in this context, we've reached out to Fintrac in conjunction with the CJA and confirmed that precious stones would include lab-grown stones. And so not just natural diamonds, but also lab-grown diamonds. And if you are a dealer in precious metals and stones, then you're required to comply with Canadian laws. There are very few exemptions that exist. These include activities like manufacturing, mining, cutting, and polishing. And if you're an exempt entity that is focused on these things, you can have limited sales to your employees and maintain that exemption, but there's no exemption for friends and family. And that's something that's fairly important to remember. And this is probably a good time to address a question that's in the chat, which is there an exemption from Fintrac requirements and AML requirements for First Nations? And there are not. So Fintrac themselves, this is the Financial Transactions and Reports Analysis of Canada. Whew, that's a mouthful. I'll just be saying Fintrac from here on in. And as a reporting entity, you need to submit certain types of reports to Fintrac. They're our regulator. They're also Canada's financial intelligence unit. So they correspond with law enforcement. They pass information to law enforcement. And if you are not the compliance officer for your organization and you receive communication from Fintrac, pretty please figure out who your compliance officer is and get that to them right away. There's usually very short timelines to respond to anything that the regulator is asking for. So when you get those letters, it's important that the person who will be dealing with them gets them as soon as possible. If they're not in the office that day, give them a call and let them know that something came in. That's my plug for communication quickly with compliance officers. As a dealer in precious metals and stones, you have certain requirements under Canadian law. So you have to have a compliance officer. That's a person who's ultimately responsible for compliance within your organization. Policies and procedures. These need to describe not just what your responsibilities are, but how you're meeting those responsibilities. So what you're actually doing. Those need to be tailored for your business. You need a risk assessment, and this talks about the risk that the business could be used to launder money or finance terrorism, and also what you're doing to prevent that from happening. You need an anti-money laundering compliance effectiveness review, which is like an audit, but for compliance. That is exactly as much fun as it sounds, and it's required every 2 years. You also need to have a training program. So for any of your staff that are dealing with customers, that are dealing with transactions, there needs to be updated training on anti-money laundering on an ongoing basis, and that's generally interpreted to mean at least once a year. In terms of your operations, you need to report certain types of transactions, keep records, identify customers in very specific circumstances. You need to risk rate customers with whom you have business relationships and monitor transactions for customers with whom you have business relationships. I'm going to hand it off to David to talk about reporting and changes that are coming in that sphere.
Yeah, so we're going to talk a little bit about reporting. There are some new types of reports that are coming into force that would apply to DPMS, depending on your specific business model and the type of payments that you accept. Amber, if you want to go to the next slide, please. So here's a list of all the Fintrac reporting that applies to DPMS. If you accept cash, over $10,000, that has to be reported to Fintrac, and that is within 15 days of the transaction taking place. And in this context, cash actually means exactly that, cash. It's not checks or bank drafts or anything like that. It is actually taking cash. Even if it is done on an exception basis, they still have to be reported. The $10,000 is one single transaction or multiple transactions within a 24-hour period, and it is per customer. So that is an existing requirement, no changes there. But similar to that, there is a new requirement, and we touched on this if you were in the last session, large virtual currency transactions. And these have to be reported to Fintrac within 5 working days from when the transfer or the amount is received. Large virtual currency here means cryptocurrency. So this is an example would be Bitcoin. Very similar to cash, it can be one transaction or multiple transactions within a 24-hour period. So it's important to have mechanisms in place to be able to monitor for transactions that might happen in multiple transactions, but then accumulate to $10,000, because you have the reporting obligation, but you also have an identification requirement, which we're going to talk a little bit about later. Suspicious transactions and attempted suspicious transactions, you'll note there some font changed in green as soon as practicable. This is already in force. This changed in last June. The previous was 30 days, and now as soon as it's practicable after completing measures that enable the determination that there's grounds that it may be connected to money laundering or terrorist financing. And what that really means is it should be done as soon as possible. Priority should be given to suspicious transaction reporting over other compliance duties and other duties. When you are investigating such unusual transactions, it is important to pay attention to the details that you're documenting, such as the date that the investigation was concluded, and if there is a determination made that it's going to be reported to Fintrac or not. Terrorist property reporting has to be reported immediately, and this one goes to Fintrac, RCMP, and CSIS. Fintrac provides a secure portal to report these online. So if you don't have access to that, you should reach out to Fintrac to make sure that you are set up to report such transactions. Reporting fields. So with the changes come more reporting fields. The revised reporting fields will require more detail to be sent to Fintrac than previously required. There are a lot, and we are waiting for new forms to be published by Fintrac, but based on the amended regulations, we've noted some of the most, probably most important changes that you'll see for such reporting. And these reporting fields apply to all those reports that I just discussed. So every reference number that is connected to a transaction, and what that really means is if there is any sort of internal reference number, such as a client identification number that you use internally, that now has to be reported. Type of device used by person who makes the online request. So this is really related to online transactions. And a lot of the new fields are related to online transactions. The number of the, so the ID device number, as you know, or may not know, smartphones and tablets have this number, and it may be transmitted when you do a transaction. IP address, so for online transactions, the IP address that's connected to it. If there is a username connected, so if you have online accounts for a customer, their username would have to be transmitted in that report to Fintrac as well. And then lastly, the date and time that that person was online and requested that transaction to be made. These fields are marked as optional, but optional in the context of Fintrac reporting means if you have the information on hand, you have to include it in the report. This may be something that's collected within the background for marketing reasons or for IT or other purposes. So it's important to make sure that you're aware of what you're collecting, and if you are collecting these, that they are included in the reports to Fintrac. We can go to the next slide, Amber. So a little bit more detail on large virtual currencies here. As we stated, it's $10,000 within a 24-hour period, and that can be a single transaction or several transactions. You are ultimately responsible for reporting these types of transactions. And so if you are receiving virtual currency as a payment, even if you use a payment processor, so that was a question that has come up before. So even if you are going to someone to process that payment for you, you are ultimately responsible for reporting that $10,000 or more to Fintrac. As I stated, it's important to have a mechanism in place to make sure that you are connecting multiple transactions together to see if that they accumulate to $10,000 or more. And this could be multiple types of virtual currency payments by a particular customer. One important thing before we jump to the next slide is if we cannot identify the customer, and we'll talk about what identification means right now, you cannot complete the transaction. Ashley,
David and Amber, we have two questions. One is already tied to something you already talked about, David, the IP address. Would you like to answer them now, or? Yeah. Okay. I'll let you take that.
So the IP address is something that usually would be collected in the background, and this is collected to your IT provider. If you're conducting online sales, it's usually something that is going to be transmitted to you. Amber, I don't know if you want to add a little bit more there.
I do. So for that one, the thing that I want to add is just the last point on this slide, which is that's an optional field. So you're not required to collect the IP address. But if you are collecting the IP address of folks that are visiting your website when you're doing online sales, then you're required to include it in your reporting. And this might be something that is worth talking to your IT department about, just in terms of what you are collecting when someone is on your website. There's a lot of things that get collected in the background that we might not necessarily be aware of, but if it's there, it is an obligation. If you're not collecting it, this doesn't imply that you need to start collecting it at this point. And the question related to ID we'll address in a minute.
There's another question I'll just address one time. So if someone makes a purchase and leaves with the merchandise, a large sale perhaps, how could this be considered money laundering when it appears to be a legitimate sale? So the sale might very well be legitimate. Again, the connection here that you're trying to make is if the proceeds or the payment was connected to criminal activity. So for instance, the customer might have actually stated that in the transaction there. Sometimes people are not so smart and they disclose information like that. It might be something that you discover after the fact. So, you're watching the news and the person's name, you talked or gathered the name for warranty purposes or something, and you recognize the name, and it turns out they've been charged with criminal activity. At that point, you would go back and look and potentially report that, or in this case, you would report it as a suspicious transaction. In our last presentation, we did talk a little bit about, or we talked fairly in depth about suspicious transactions and some of the indicators. It's important to note that there's no one specific indicator that usually means, this has to be reported all the time, except in that context of me saying that my transaction is the funds have come from criminal activity. But again, it's a case-by-case situation, and after investigation, if you don't determine that it is suspicious, you just document and you don't need to report. So we'll talk a little bit more about large virtual currency information. So this is the specific information that has to be included in the report. So the date that you receive the virtual currency has to be included. Certain information about the person or entity, including a third-party determination, and we'll talk in depth about that shortly. The amount received for virtual currency, as I stated earlier, this could be multiple virtual currencies received. The amount of each one needs to be included. Also, the exchange rates where the amount has, and their source needs to be included. Every reference number connected to the transactions, so similar to an account number or customer ID, this would be an example of that. A transaction identifier, so the receipt or on the identifier on a receipt, that would be included. And then also the virtual currency, what the virtual currency was exchanged for. So what precious metals and stones were given, that needs to be included, and then the wholesale price of those needs to be included as well. So identifying customers, we did receive a question on this. So receiving virtual currency, $10,000 or more, cash, $10,000 or more, or those suspicious transactions require you to identify customers. And what that means is you are going to verify the name and certain information for the person that you are doing the transaction with. There's three methods that you can use to identify a person. The first method is the government issued photo identification. In this context, you're going to verify the name and the face match of the person. The ID document, if it's done in person, this is fairly easy. The person standing in front of you, you're going to be able to compare the face very easily. And then you're looking at security markers on the ID to make sure that it's a legitimate ID. You can actually use government ID for online transactions as well. The same requirements still apply. So for the face matching, you might have the person hold up their ID and take a selfie, and then you're doing a visual comparison between the photo and that selfie. But you need to authenticate the document as well. And there are software providers out there that will help with doing this. So you would have the customer perhaps, take a picture of the front and back of the driver's license, and that barcode information on the back of the driver's license would be authenticated by a software technology company saying, yes, this is an authentic driver's license. The credit file method is another method that can be used, and this is often used in an online space. And this relates back to the questions that we found earlier. So for the credit file method, you're verifying the name, address, and date of birth of a person. For it to be able to use the credit file method, the credit file has to be in existence for at least 3 years, and it has to have 2 different trade lines. The trade lines on the credit report have to be from different sources. So if I happen to do all my banking with RBC, I have my mortgage with RBC, I have my auto loan with RBC, and that is the only entity that is registered on the trade line, you cannot accept the credit file method. Under the dual process method, what happens here is you're using 2 different reliable sources of information, and you're going to match 2 of the 3 categories, so name and address, name and date of birth, or name and a Canadian financial account. For the dual process, reliable and independent can be taken that the document or piece of information should be issued by federal, provincial, or municipal government, a crown corporation, or a financial entity or utility or education. Those are typically what is referred to as kind of a reliable and independent source. One last point on the dual process, you do need to ensure that the document is authentic. So if you believe that the document has been altered, you cannot accept the document. I'm just going to pause to see if we have questions before I talk about agents. Okay, all right. And an agent is going back to that government photo ID, they would complete that process on your behalf, essentially. And we can go to the next slide. All right, we're going to talk a little bit about organizations and identifying an organization and what that exactly means. So if you are doing business with an organization, you do need to collect certain information. In particular, you need to connect their full legal name, the organization structure, their principal business, so what is their primary business, what are they doing, a physical address, a phone number, and information about the owners or the beneficial owners, which is anyone that controls 25% or more of the business. If the organization, if it's an incorporated organization, we also need to ask if they're a nonprofit or a registered charity, and if they solicit funds from public. Those answers have to be documented. Again, this goes back to anyone that was in our previous presentation. Everything that you do, make sure you're documenting. Amber, I think we can go to the next slide. Beneficial ownership. So here's some examples of exactly what that means. All persons who control directly or indirectly 25% of the organizations and their directors. For trust companies, it will be the trustees and the known beneficiaries. And then for any other type of organization, an example could be a partnership, all individuals that control 25% or more. And again, that directly or indirectly is very important, which we'll see in the next slide. Here's an example of direct beneficial ownership, fairly easy. There's an incorporated company and there's two owners, each owning 50%. Basically here, you're going to identify both customers. We can go to the next slide.
Can we pause here for just a second? There's a question that came in that I think is important, which is the circumstances under which we would identify individuals and organizations. So this can happen for online sales. It can happen for in-person sales. There's certain instances where you're required to do it. And I'm just going to go all the way back to the slide that talked about reporting changes. And that's where you hit any of these types of transactions that are reportable. And so if you have a large cash transaction, then you would go through this process. And you wouldn't generally have a large cash transaction for online sales, but you might have a large virtual currency transaction for online sales, which is where you would need to go through one of these processes. And if you have an attempted suspicious transaction or a suspicious transaction, you need to try to identify the person if you can do that without tipping them off, which means that if there's a circumstance where you know if you asked this person for identification, they would 100% know that you're suspicious, you would document that you didn't ask for identification for that reason. Back to you with this one or the next one.
We could go into the next one. Indirect beneficial ownership. So sometimes if you're dealing with an entity, it might be owned or part owned, or there might be subsidiaries. We have to drill deeper and figure out who the actual beneficial owners are. In this particular example, you can see There's 3 owners here. All 3 would have to be identified. And I'm just going to actually drop in the chat. Actually, maybe I'll do it at the end. Fintrac actually just released or rewrote and re-released their guidance on beneficial ownership last month, actually. It's very detailed. Fintrac is doing a really good job at getting more detailed and prescriptive in these guidance documents. So I think, we're talking about this at a little bit of a high level, but there are very detailed requirements, and that guidance document is a very good document to read if you do if you need to identify any organizations. So what happens when identification fails? Documents. Whatever measures you've taken, the reason why you couldn't obtain the identification needs to be documented. Under no circumstances should a large virtual currency or a large cash transaction take place. There are no exceptions for this. It doesn't mean you cannot do business with the customer. If they are an entity, they need to be considered high risk. And high risk, we'll talk a little bit more about shortly and exactly what that means. Go to the next slide. Third parties. So in the case of a large cash transaction or a large virtual currency transaction, so again, that $10,000 or more in a single transaction or multiple transactions, you have to identify the person, but you also have to conduct a determination if there's any potential third parties. If there is a third party, you need to collect certain information. And a third party in this context really means, is somebody instructing the customer that's in front of you? We gave an example before of this is not really meant to capture, somebody shopping for an engagement ring, and their significant other is with them and picking it out. It's really meant to capture, my friend gave me this cash to come in and buy this Rolex. It's really meant to capture those types of things. For third parties, just quickly mention, so you need to, I said you have to collect certain information. It would be the name, address, occupation for them. If they're self-employed, it would be their principal type of business, and then also what the relationship is between the third party. And we can go to the next slide, which Amber, I'll turn it over to you to talk about business relationships.
Okay. So business relationships is, I think, probably one of the most confusing terms in the world of anti-money laundering relationships or anti-money laundering lingo. A business relationship doesn't necessarily mean that it's a relationship with an organization or with another business. It might be an individual, it might be a business. And what that means is that you've done 2 or more transactions in the last 5 years that required identification. So just to go back through what those transactions are: large cash, large virtual currency, suspicious or attempted suspicious transactions. Those are the 3 things that are going to trigger a business relationship for you as a dealer in precious metals and stones. So if you have 2 or more of those types of transactions with the same person, with the same company, then you would have what's known as a business relationship with them. That requires you to collect some additional information. So you need to collect the nature and purpose of that business relationship. That might be something like buying jewelry for special occasions. It's really dependent on your business. It doesn't need to be overly complex, but it's just an answer to why are they doing business with you overall. If you have a business relationship with a customer, then you would do a business relationship risk assessment. So you would look at that customer and say, based on what I know about them, based on the information that I've had to collect when I collected ID, do I think that this person is a high risk for money laundering or terrorist financing? Now, there are certain times when the answer to that must be yes. For instance, if this is a foreign politically exposed person, and I'm going to talk a little bit about what that means, because at the point that you have a business relationship, you've got to collect the nature and purpose of the business relationship. You have to ask the question, so are they a politically exposed person or not? And you need to assign a risk rating. Most of these customers aren't going to be high risk. But if you have customers that you have a business relationship with because you've had to file more than one suspicious transaction, that's another instance where I would say you almost certainly want that customer to be designated as high risk. You have to update that assessment to the customer's risk periodically. And everything that you do, every change that you make in this regard has to be documented. I can't stress that enough. From a compliance perspective, document, document, document. When we're doing audits, one of the most difficult things for me is that we'll encounter businesses that are doing all of the right things. So they did everything that they were supposed to do. They know the information, they can describe it to me, but they've never written it down. They haven't typed it into an IT system. They haven't put it in a logbook. And when you're dealing with Fintrac or when you're dealing with an auditor, if it's not documented, it's considered as not done. And so that ends up being a deficiency, even though you did the work. Which is to say that if you're doing the work, pretty please go just take that last step, make sure that you're documenting it somewhere, either in your systems or on paper. The same goes with everything that I'm going to tell you that you need to do for these business relationships that are high risk. So if a customer that you have a business relationship with, again, 2 or more transactions in the last 5 years that required ID, large cash transactions, large virtual currency transactions, suspicious transactions, and they're high risk, then you need to do enhanced due diligence and enhanced transaction monitoring. Enhanced due diligence is really going to be based on the reason that the person is considered to be high risk or the business is considered to be high risk. So you want to look at that and say, well, why do I consider Amber to be high risk? And maybe the answer is, I've done a couple of large cash transactions and I always come in looking grubby and I have this ID that just, it looks like it's been through a washing machine, and you're pretty certain that it's authentic, but I seem to only just have this driver's license that looks a little bit sketchy. Then your enhanced due diligence might involve things like looking me up on LinkedIn to say, hey, okay, this is the Amber person that was just in our store. Can I find her on social media? Can I find her on a company website or on any public forum that's going to help me authenticate that this person is who they say they are? Again, document that you've done that. Take screen prints of web pages, make PDFs, keep something to, or just keep notes to say we did this. The person that we saw seemed to be the same. But keep a record that you've done that. And then the enhanced transaction monitoring activities are really going to be for the purpose of detecting activity that might be related to money laundering or terrorist financing. You always want those things to make sense given your business. So you might do monitoring for me at a different rate. If I'm working with you and you're a wholesaler and I'm doing buys from you every week, then you want to look at my information more frequently than if I'm someone who comes in once a year. So there's no real one size fits all answer. It needs to make sense for your business. It needs to make sense for your relationship with that customer. And you need to be able to explain to an auditor or to a Fintrac examiner, here's why we're doing this particular way for this customer. In the context of an audit or an examination, you're usually asked for records that can go back as much as 2 years. So when I think about how detailed my records should be when I'm keeping these types of notes for a client that I'm working with, it needs to be detailed enough that someone who is not involved in your business that reads this 2 years later can understand exactly what happened. And I know for a lot of us, we have lots to do. We're in a hurry. We have a quick shorthand. That can end up being incredibly tense later on when you're trying to look at it and say, oh, here's what I think it means, but I wrote it 2 years ago. So you really want to make sure that those are clear and concise and fact-based. So let's talk a little bit about those politically exposed people and heads of international organizations. So politically exposed persons, we're going to use the term PEPs for that. they're not bad guys. So we're not saying that these are bad people. We're not saying that you shouldn't do business with them, but they're considered to be high risk because they might have access to public funds. They're more vulnerable to things like bribery and corruption. And so we need to be aware of those types of things. Foreign politically exposed persons, so foreign PEPs are always going to be considered high risk. And there's a big laundry list of things that would make folks a foreign politically exposed person. When you have a business relationship with someone, you can actually present them with that list. So, you know, are you a politically exposed person? And if they're not sure what that means, here's a list of what those things are that you can look at with them. For domestic politically exposed persons, here again, there's a lot of federal and provincial positions that are considered to be politically exposed. At the municipal level, the only position that's considered to be politically exposed is a mayor, and that's agnostic of the size of the municipality. So it doesn't matter if you are the mayor of Calgary or if you are the mayor of, you know, Smith Falls, Ontario. It's agnostic to size. The mayor would still be considered politically exposed. One of the things that will probably happen more often than not when you have to do politically exposed determinations is that you will get more false positives. So you might get someone that not understanding the question is, oh, well, yes, I'm a city councillor in Victoria, ergo I'm politically exposed. That's not someone that you necessarily need to consider high risk. But it's important to know that distinction, that you might get people that self-identify, that tick the box to say yes, and they're not really politically exposed. If that happens, you would just document, okay, so this person is a city councillor in Victoria. They've self-identified as politically exposed, but based on that position, they are actually not. And then you would go ahead and not consider them high risk unless there were other factors that actually make them high risk. Another important distinction is that for foreign politically exposed persons, we have to consider them high risk, so that's a requirement. If they're a domestic politically exposed person, it's up to you as a business to make the determination about whether or not that person is high risk based on their position, based on what you know. So you have to be able to justify that. For simplicity, there are a lot of businesses that have simply said, if we're aware that someone is politically exposed and we have a business relationship, we're going to consider them high risk regardless. And that's a relatively simple approach in that it takes away the requirement that you have a rationale for each of these positions, because it can be really difficult to describe. Well, if someone is the mayor of Sudbury versus the mayor of Toronto, who's higher risk and why? It's all about how you want to spend your time. The heads of international organizations. So these are people that are the heads of organizations that are established by governments or states. So when we talk about these international organizations, we're talking about things like the UN, the United Nations, or the International Monetary Fund, the IMF. We're not talking about things like private companies that operate across different jurisdictions. So there are a lot of companies that might have operations in multiple places. That's not going to be the head of an international organization. PEPs will include, and HIOs as well, will include family members. And these are just direct family members of that person. So someone who's the mother, father, spouse, common law partner, brother, sister. It doesn't include cousins, uncles, third cousins, and any of those things. And that's another place where you might have someone self-identify to say, ah, yes, my uncle is a judge in Bermuda. Well, if it was my father, I would be politically exposed, but it's my uncle. And, you know, again, you can cross that one off as not truly being a politically exposed person. And the last and probably most difficult piece is closely connected individuals. So these are people that you think you should reasonably know have a relationship with a politically exposed person. One of the funniest examples that always comes up in this is a mistress, which I think is interesting because I feel like most people aren't going to self-identify into that. And this really comes down to if you know that someone is closely associated with a politically exposed person, then you would do that assessment of the risk around it. In terms of those determinations, you can ask the customer. So this can be a relatively casual conversation with the customer. Remember to document the response. It's not enough if you've asked the customer, but you haven't written down. You know, we asked the customer on this date, they were in the store, we asked them if they were politically exposed, they said no, we carried on with our day. You can also, especially, you know, if you're dealing online, you can use a checkbox method. You can use software that does screening automatically. So you can choose to not even ask your customers, but just have software do the screening for you. And if the customer is a high-risk PEP or HIO, you need to review their transactions with the senior officer and get sign-off within 30 calendar days. So that's, you know, your CEO or your president saying, yes, we're comfortable with this relationship, we're comfortable with the risk that it presents, and we're comfortable with the plan to manage the risks. So to do that enhanced due diligence, to do that enhanced transaction monitoring for that business relationship.
Amber, I just, before you move on, I just dropped in the chats the PEP guidance from Fintrac, which was also recently updated. It gives a good breakdown. So as Amber said, the determination at the business relationship has to take place, but it also gives a couple of other scenarios. So probably doesn't apply to anybody on this call, but if you do receive cash in $100,000 or more, or virtual currency of $100,000 or more, you have to do a determination at the time of that transaction too. Again, not likely, but it is a requirement for a DPMS.
Okay. And I will hand off to you for our conclusion.
Sure. So just to recap, one of the biggest changes is if you do deal with virtual currency, such as Bitcoin, they have to be treated like cash. There is the reporting obligation to Fintrac for $10,000 or more within a single transaction, multiple transactions. It could be a combination of multiple types of cryptocurrency, and this has to be reported within 5 days. If you are doing such transactions, you do have to identify customers, and we went through the 3 types of identifications methods that you can use to identify customers. If you are accepting customers that are organizations, you have a duty there to identify them, collect certain information about the organization, but you also have to collect information about the beneficial owners or anyone that owns 25% or more, whether that be directly or indirectly. And then lastly, the new requirement for PEP and HOI, head of international organization determination, when you enter into a business relationship, has to be conducted. For just a reminder, the business relationship is that tricky one of 2 or more transactions that require identification. So that could be large cash, large virtual currency, or suspicious transactions. And it's any of those 2 within a 5-year period. So if you do conduct, cash as an exception at a trade show or something like that, trade shows are not really happening right now, but when you resume, you might have had a cash transaction 3 years ago from somebody and they may come back and do another cash transaction, or now you accept virtual currency, you would have a business relationship with that person. And that's all for the recap.
So
there's a lovely question in the chat box, guys. We need to provide a bit of clarity on a question, if you want to take that, Amber or David.
Yeah, sure. I can take that. So the determination is when you enter into a business relationship. So it's that second transaction. So if somebody comes in or they just do one large cash transaction and within a 5-year period, they never come back and don't do it again, that determination doesn't have to be made under the requirements. It is a best practice that you probably still want to do that, but it's not a requirement. The requirement is at a business relationship. So it's that second transaction that requires identification. That's where it comes into play. Or if you have a transaction that involves cash, that's $100,000 or more.
I think if there's more questions that are coming through from our audience, it would be a good time to have them coming now, David and Amber. Are there more slides at this point, or?
No,
There we go.
We've reached
pretty
our
much at the
natural
end.
conclusion.
The lovely ending slide. Well, we've received so far great questions, and we still have a bit of time left until 2 p.m. I will just give the audience a little bit of time. If not, I don't know if there's any questions that came to you directly that we would like to answer the most asked questions. If not, we're going to give people time, 10 minutes back of their own precious time, but probably a bit more. Let's see what else is happening.
Perfect. So the only other thing that
Yep.
that I'd like to add is if you're using the online kit, stay tuned for an email that will go out in May that will let you know that all of these updates have been integrated into the kit. You'll need to go through and do some adjustments to your program. But we've also made some adjustments that I think are going to make the online interface a lot easier to use. So you won't have to click through and skip all of those slides that don't apply to you. It's just going to automatically pull in what applies based on your answers to the business model questions. So I think that's going to be a much quicker, peppier experience. And once you have a chance to go through it, please let us know if you have feedback. If you catch any bugs or anything like that, please report them.
And just to clarify, for anyone who's interested in the kit, CJ members have access to the kit for free because that's a perk of being a member. And in order to access that, if you have not done so, please contact the CJ office. We're here for you, and we'll direct you to Amber and David. Their contact details are on screen, but obviously the CJ members have a different privilege than members that are members of the trade that do not belong currently to CJ. So one of the biggest perks, as we said right before, and members who have dealt with Amber and David could not find them more lovely than they are. So
Yeah.
I thank you. I think there's another question. Amber, David?
Sure. So the question is, should it only be the owners or management contacting Fintrac? So there should be a streamlined communication with Fintrac. If you are not the compliance officer, if you're not the person that is responsible for that type of contact, then it's better to go through the person who is. They may have other contacts with Fintrac going on, other conversations going on, but also as a reporting entity, every time you contact Fintrac, it essentially gets attached to their record of your entity as a reporting entity. One of the funny things that happened to me when I was in compliance at a bank was that I got a phone call because a customer service representative had just had an interaction with a client and thought, ooh, this was suspicious, I should report it. And so they didn't go on our internal wiki and just fill out the report that would have come to someone like me. They called Fintrac on the phone and said, hey, this happened, should we be reporting it? What do I have to do now? And then Fintrac called me to say, you need to train your employees because we just got a phone call from someone about how they report a suspicious transaction to us rather than them talking to you as the compliance officer. So there's really that expectation from the regulator that that communication is going to be streamlined. It can reflect badly on the reporting entity if that's not the case. It's not the end of the world. You're not going to get a penalty based on something like that, but you really want to make sure as an organization that you have that communication streamlined and buttoned down.
And there's a comment / type of question in the chat box, Amber and David, if you want to clarify that in regards to the principals info. It's just sent to the panelists, so maybe we can read it out loud so everybody understands what we're answering.
Sure. So it's if you deal with corporations, do you have to get all of the principals info regardless of the size of transaction and type of payment? This is really, again, only about those types of transactions that require identification. So we're coming back to your large cash transactions, your large virtual currency transactions, or anything that occurs that's suspicious, either completed or attempted suspicious transactions. if there's nothing unusual about it, so if I, using my outlier corporate card, decide that I want to buy a piece of jewelry for all my staff to thank them for being awesome, and that's how I'm making my payment, but there's nothing unusual about it. That's just an example. Sorry, David. But if I were doing that, you wouldn't consider it suspicious unless there was something else about it. So there was some other fact or indicator that made you think that that might be related to money laundering or terrorist financing.
Yeah, and it's just important to note that, you may feel a lot of these requirements don't apply because, I'm not going to take virtual currency, I'm not going to take cash. But in the context of suspicious transactions, it's still important to know the identification requirements and to try to identify. It's important also business model changes or one-off exceptions. We've seen things like that. Well, I only took cash once at a trade show. So, but you take that once, it meets the threshold. All those requirements kick in. Even if you don't accept cash ever, virtual currency, it's still important to meet your obligations for everything else, right? You still need to have a compliance officer. You still need to have policies and procedures. You still need to have a risk assessment. Fintrac can still show up and audit you, even if you say, I don't conduct these types of transactions. So just to reiterate that, you may feel that you don't have to know this, but you do need to be familiar.
And can we remind everyone the limit for the cash transactions, David and Amber?
Yeah.
$10,000.
10,000. Yeah. And
Canadian funds.
10,000 Canadian. So you can receive it in any currency, but when you do that exchange, 10,000 Canadian. Yeah.
Okay. Well, great session, guys. I don't see any more questions coming through, but this was incredibly packed with information and valuable, and we're always here to answer any other questions that might come through even after the webinar if our attendees have forgot something or remember something after. And always contact CJ, and we'll pair you with the outlier team to answer any questions that you have. And I think we should also clarify, Amber and David, that the kit is only applicable in Canada if it comes to, yes, because CJ has received questions in the past if the outlier kit would apply to businesses who conduct work in the US. And no, our outlier kit does not apply to that, but please contact the CJ and we will connect you with the entity in US that we work with to help you with that. If such a question ever comes through, CJ will be happy to make the connection to our partner in US that we deal with, and that helps us. Right, Amber and David? Not to take away from you, but we just want to say.
Oh no, they're fantastic.
Yeah.
Legislation is, I know that business is global, but legislation is very local, and the requirements for each jurisdiction are going to be different.
Right.
Yeah.
Right.
And we rather
similar
you work with an
but different.
Right. And just to clarify, the outlier kit is free for CJ members. When it comes to the US kit, if ever it comes to that, CJ members get a discount, but please contact me directly for that question and we will direct you. Otherwise, Amber and David, this has been great, and thank you for part 2. We don't have part 3 coming, but I'm sure you guys will be on top of any other changes coming through, and who knows, we'll see what happens. Maybe we can put something else together in the near future. Meanwhile, I thank you for everyone who has given us your time. Oh, sorry, one more question in the chat. We will answer that privately. Stephen, thank you very much. Thank you everyone for your time, and great job, Amber and David. Thank you for all the information you've provided today. And thank you to all. Have a lovely day going forward.
You as well. Thank you.